Hi there, astute financiers and upcoming financial titans. Investing Tutorial is your go-to resource for discovering the keys to financial independence. Welcome back. I'm your host, and today's topic is assets that can make you rich, which is a fascinating one that can change your financial path. Before we dive in, let's understand what investing truly means. Investing is not just about numbers, it's about creating a path to financial prosperity and security. In the dynamic landscape of personal finance, investing stands out as a powerful tool for those seeking not only wealth accumulation, but also long-term financial security. We understand the paramount importance of making informed investment decisions. In this comprehensive video, we delve into the multifaceted benefits of investing, providing strategic insights that go beyond the conventional narratives. One of the most compelling advantages of investing is the magic of compound interest. As we invest, our money doesn't just grow, it grows exponentially. This compounding effect can turn even modest investments into substantial wealth over time. Rather than letting your hard-earned money languish in a standard savings account or bank, where it hardly makes ends meet with inflation. Investing is a way to let your money do the heavy lifting so it may develop and work for you without you having to be there, in order for you to later enjoy the rewards of your labor. Identifying the monthly amount that you can comfortably save and invest is the first step. Aim to invest between 10% and 20% of your monthly income as a general rule of thumb. Therefore, if your monthly income is $3,000, it leaves you with $300 to $600 to invest in your future. The key is to strike a balance between living for the moment and saving for the future by paying your bills, yourself, and leisure expenses before making impulsive purchases. The truth is that inflation eats away at your hard-earned money, and hiding cash beneath the mattress won't make it grow. Your standard savings account won't cut it, but if you invest it, you'll be able to take advantage of compound interest, which is what compounding is. Compounding is the process by which an investment's initial principal, as well as its cumulative interest, or returns over time, produce additional earnings. When it comes to investing, time is your best friend. The earlier you start, the more time your money has to multiply. If you'd want to learn more about compound interest, there are some truly incredible videos on it that can enlighten you. One thing to remember is that every person's investment journey is unique, so avoid falling into the comparison trap and don't compare yourself to others. Your travels are as distinct as your fingerprints. While some people may begin with a larger initial commitment, others may move more gradually. Your investing preferences and risk tolerance are specific to your financial objectives. Each of us is traveling a different route, and that's okay. Now that you know a little bit about investing, embrace your own journey and resist the need to follow in the footsteps of others. Let's talk about 10 fantastic investing opportunities, starting with cash at number 1. Because cash is the most liquid form of wealth, it is an asset, even though it may seem counterintuitive to hold some cash in your portfolio. It's a calculated action that offers security and flexibility. Although it's frequently forgotten in conversations about investing, having cash on hand is essential to any comprehensive financial plan. Even though it might not yield the same high returns as riskier investments, keeping cash on hand serves as a safety net for unforeseen costs and possibilities. Consider it the base of your financial structure. You can take advantage of investment chances when you have some cash in your portfolio. Traveling through interest rates, the trick is to strike the correct balance between keeping enough cash on hand for security and allocating the remainder to investments that yield returns. Large cash holdings, which frequently fail to exceed inflation, can gradually lose purchasing power. Being financially flexible without compromising one's ability to advance is key. Number 2, dull business. When we discuss dull businesses, we're not writing them off as uninteresting. Rather, we're bringing attention to the promise that small, consistent endeavors frequently have. Think about the allure of tiny enterprises that, although they may not make headlines, can produce steady profits over time. Think of going into markets like pet-related services, print-on-demand shops, or even social media consulting. These may not be the glamorous Silicon Valley startups grabbing the news. However, they are the epitome of dependability and sustainability. A pet business, for example, capitalizes on people's unchanging affection for their animals to guarantee a constant flow of clients. Because pet owners continuously invest in their pets' well-being, From premium pet food to specialist grooming services, this business has shown resilience. Print-on-demand businesses are another avenue. They are low-risk company models where you don't have to touch any products because online marketplaces like Redbubble, Etsy, Amazon PRL, and many more take care of everything, generating goods as orders come in. The growth of e-commerce has made this a feasible choice for creative companies, avoiding unnecessary inventory. Digital products are another fantastic industry that is expected to bring in billions of dollars in the upcoming years. Company offering online courses or ebooks for sale. These uninteresting companies might not have the glitz of large tech. However, because of their cheap overhead, stability, adaptability, and potential for niche dominance, they are a desirable addition to your investment portfolio and can scale quickly. Occasionally, the most noteworthy returns originate from unseen ventures. Number 3. Selective real estate. When it comes to generating wealth, real estate is a tangible asset that has endured. It's not just about purchasing a house. There are other ways to get your feet wet in this market. First-rate rental homes. The ability to rent out real estate can be a game changer. It's like having a second stream of income that, with time, may even outpace the property's initial worth. The key is location, though. Select locations with increasing demand and appreciation potential. Investing in small business commercial leasing spaces is an additional alternative. As businesses expand, they require locations to operate, and by owning the property, you can profit from their success. Finally, if you're not into hands-on management, you could want to look at real estate investment trusts. These are businesses that own, manage, or finance revenue-producing real estate. Investing in real estate exposes you to the market without requiring you to deal with the hassles of property management. It resembles owning a portion of a professionally managed real estate portfolio. Number 4. Basic agricultural land and consumer staples. Purchasing consumer staples and basic agricultural land is an investment in basic human necessities. Food and necessities are necessities that people will always need, making these investments relatively recession-resistant. Strategically acquired agricultural land can yield both capital appreciation and income from farming or leasing. However, land is a finite resource, and as the world's population grows, so does the demand for both land and food. Why do you think that even if it might not be as ostentatious as some investment options, its stability and long-term potential make it a desirable addition to a diverse portfolio? Bill Gates owns more than 200,000 hectares of farmland throughout the United States. He looks for areas with fertile soil and a track record of stable agricultural production. On the other hand, investing in consumer staples, companies that make household goods and food hygiene products, provides a defensive strategy that typically lasts through recessions. Because consumers still need to purchase these goods, investments in them are less susceptible to changes in the market. A person may limit their luxury spending when things are hard. However, as long as people continue to use these things, basic requirements will exist. Over time, businesses in this industry can yield consistent profits. Putting money into these industries can stabilize earnings and serve as a stabilizing force when the economy is unstable. Number 5. Medications and dietary supplements. Putting money into the healthcare industry, especially in the pharmaceutical and health supplement sectors, is in line with the ever-growing demand for goods that improve well-being as the population ages and global health improves. As awareness increases, the pharmaceutical industry is well positioned to experience steady expansion as businesses involved in manufacturing and drug development present prospects for investors. Search for companies that have a track record of successfully launching drugs and a strong pipeline of cutting-edge products. In a time when preventative healthcare is becoming more and more important, health supplement firms that offer vitamins, minerals, and wellness products can also be profitable. These businesses frequently see steady demand. The healthcare industry is appealing to long-term investors who are concerned with both financial returns and having a positive social impact, because it is not just immune to recessions, but also at the forefront of technological improvements. Number 6. Investing in art. Though it may not be a conventional income-generating investment, art may be a distinctive and tangible asset for the common investor. It may just appear like something for the elite. Over time, art has the capacity to gain recognition. Search for works by up-and-coming artists or those by well-established artists who have a history of increasing in value. It can be beneficial to participate in local art scenes, visit exhibitions, and study industry trends in order to spot possible business chances. Remember that the art market is subject to sudden changes. Therefore, in order to reduce the risks connected with the volatility of particular genres or artists, it is imperative that you invest with a long-term perspective and diversify within your art portfolio. Number 7. Currency exchange and foreign investments. Investing in foreign exchange and investments opens the door to a world of varied opportunities. When thinking about foreign investments, look beyond national borders and embrace the global market. Look for well-established businesses that have a history of stability and growth. However, this time, diversifying your portfolio globally will protect you from regional economic downturns and position you to profit from global economic growth. When it comes to currencies, consider them an extra layer of diversification. Even though the US dollar may be your home currency, you should think about putting some money in foreign currencies, such as the Swiss franc, CHF. The Swiss franc is a special and historically resilient currency due to Switzerland's reputation for financial stability and its prudent fiscal policies. Holding such currencies in your portfolio not only hedges against currency risk, but also taps into the strength of economies with different monetary policies. Just keep yourself updated on developments in geopolitics and the world economy that could affect how well foreign investments and currencies perform. This strategy increases your portfolio's resistance to market fluctuations while also expanding your horizon for investments. Number 8. Investing in the stock market. In the context of the stock market, it is critical to comprehend the significance of compounding over time. Gaining partial ownership of a corporation through individual stock investments is possible, but it carries a larger risk and necessitates extensive research. Begin with well-established businesses that have a track record of reliable performance, solid fundamentals, and a competitive edge. Consider investing in exchange-traded funds, ETFs, or broad market index funds if you're seeking for a more diversified strategy. These funds offer immediate diversification among several stocks by tracking the performance of an entire market index. Dollar cost averaging, which entails investing a certain amount on a regular basis, is a useful tactic for managing market volatility. It minimizes the impact of transient market swings and capitalizes on market downturns by enabling you to purchase more shares at discounted rates. Number 9. For millennia, people have used gold investments as a safeguard against inflation and unstable economies. Gold may not produce consistent income like some other assets, but it is frequently viewed as a safe haven asset that holds its value during volatility in traditional markets. Investing in gold and keeping a percentage of your wealth in it can increase stability. When economic conditions are unclear, such as during market downturns or inflationary pressures, the demand for gold tends to increase since the precious metal has inherent worth and is not affected by the same economic forces that affect equities and bonds. Gold can be bought in a number of ways, including as actual gold, exchange-traded funds, ETFs, backed by gold, or even equities in gold mining companies. Including gold in your financial portfolio adds diversification and may act as a buffer against market declines. Number 10. Oil and gas. Given the world's ongoing reliance on these resources as growing economies and the world's population rise, investing in the energy sector, particularly in gas and oil, can present profitable prospects. There is still a high need for energy. Investors should approach the energy industry with a discerning eye. They may choose to add energy equities or exchange-traded funds, ETFs, to their portfolios. As the globe moves toward renewable energy sources, take into consideration businesses that have sustainable practices as a commitment to environmental responsibility and an eye toward the future of energy. While the energy landscape changes, opportunities for growth and income persist for investors willing to navigate the complexities of the gas and oil market. Investing in companies at the forefront of this transition can yield financial returns as well as contribute to a more sustainable future. Additionally, staying informed about geopolitical factors that impact energy prices is crucial for making informed investment decisions in this sector. Keep in mind that the amount you start with is irrelevant. The key is to get started and stick with it. Your money will grow if you start small, learn, and adapt. Finally, you can open a demat account through Angel One if you intend to invest in the stock market. There is a link in the description. If you found this journey insightful, don't forget to hit that like button, subscribe, and ring the notification bell for more financial wisdom. Do not forget that all it takes is one click to begin your journey towards financial freedom. Explore the world of investing in more detail by watching our associated videos. Together, let's make your financial goals a reality. Cheers to your success. Until next time from Investing Tutorial, goodbye.